Going live in 10 minutes. Good afternoon, everybody. It is Friday, January 27th, 3:15 p.m. Eastern. Another day with a very limited SPY range. In the past 4 hours, we've seen about a 38-cent range, so very little trading opportunity as far as SPY is concerned. And what this low volume, lack of volatility gives us is individual names doing their own thing. We have some names looking more bullish, some names looking more bearish. When we have high volatility in the market, the correlation between all the names is stronger. And when there's less volatility, the correlation kind of weakens a little bit and stocks are able to do their own thing. So that's what we have going on SPY. We have very healthy consolidation. We'll look at that on the daily time frame in just a moment. The hourly time frame is still rejecting from the exponential resistance, so we're looking a little weak on the hourly time frame. So a little bit different perspective with the hourly. You would say, okay, that's weak. We lost the 20 period support. We're rejecting from the exponential. But then you look at the daily time frame for SPY, and that is perfect healthy consolidation, decreasing bear volume, and a perfect bull flag setup at this point. Only thing that the bulls could hope for is perhaps seeing a higher close here at the end of the day, not wanting to close right down at the low of the day. And we could see a new low of the day here at the end. We're only 13 cents above that level. So if we do continue to consolidate early next week, there's a gap to fill at 228.08. But we're just one day away, one healthy day away from a new all-time high in the market. So bulls definitely in control. The upper Bollinger Band is ascending to the upside, creating more room. We are ending this week still in a bullish manner with a nice solid candlestick, increase in bull volume, and we'll see if that momentum carries over into next week and if we get confirmation of this bull flag strength. The dollar on the daily time frame is still struggling at this 10-day moving average. Technically, we're confirming that bullish reversal candlestick with a higher low and a higher high, not an extremely convincing candlestick. The bulls want to close above that 10-day moving average resistance, which is 164. So we could still do that. We're 7 cents below that level, and we will see once this candlestick closes. But the hourly time frame does have the bulls reversing the lower high pattern, and the bulls want to see a break of 182 to see this move continue. The gold is rejecting from a key resistance. So 111, or make that 1191.33 was the top, then 1191.10, and we just hit 1191.35. So we broke that level by 2 cents. Obviously, 2 cents means nothing on an $1,100 instrument, so it's a double top at this point. Bulls have to turn that level into support, and the daily time frame is a bullish reversal candlestick. So it's a nice solid bullish reversal hammer. We have a new support formed at 1180.46. No surprise that 1180 psychological level was a tough resistance. Then it acted as support on a couple back tests. It was acting as resistance back here. So if you put a line there, there is all kinds of price action around the 1180 level, which is currently acting as support. So the bulls need to confirm the reversal candlestick on Monday with continuation and another solid green day. Otherwise, we will still be looking for the bears to remain in control. We're going to be watching this 10-day moving average resistance, which is beginning to descend. That's currently up at 1204. It's going to get closer and closer to 1200 each day that goes by. So bullish reversal candlestick. Bulls need to confirm it with some strength on Monday. Silver, this is the biggest discrepancy that I've seen in memory between silver and gold. Look at that daily candlestick. We're coming back to the highs. So if gold were directly correlated with silver, we'd be up at 1210 and 1215. So huge move on the silver chart here. We've got resistance. The lower high pattern you can still see is in play. 1731, 1727, and now 1723. So there are still a couple lower highs, and the hourly chart is likely going to need to consolidate. We'll be looking for healthy consolidation with higher lows, and we'll see if higher highs can continue. Need to be watching silver and the gold correlation, because this is definitely something new. And also need to be watching the correlation between GDX and GDXJ, because I believe it's GDXJ, the junior miners, that do have some more exposure to silver compared to GDX. Let's see if the daily chart is showing us that. Up near the high of the day of GDXJ. And we look at GDX. Well, they're similar enough candlesticks, so not enough difference there to note anything. Checking in on copper. Copper is back to 12. Well, actually, that's the weekly. Let's get back in on the hourly. So we've got building some support here, trying to head back up to 270 resistance. And we're topping out at 2684 right now, resistance on copper. So a rejection from 270 on the weekly time frame, and a key resistance to be watching, as the weekly chart has now rejected about 6 times in the past few months from 270. Turn that level into support, and we're going to see another leg to the upside, and names like FCX will certainly benefit if that occurs. The oil saw a bit of an oversold bounce on the hourly, still a lower high pattern that has to break for the bulls to resume control. They did regain control on the daily time frame by breaking 53.49 resistance, but they didn't see much follow through today. Still forming higher lows, new support established at 52.57, and now the bulls need to break 54.05 to continue the higher low, higher high pattern. We have a bullish MACD cross on the daily time frame. The weekly time frame is, however, showing some indecision. We had a bullish reversal hammer last week, not really strong confirmation, so it's going to be interesting to see next week how the price reacts compared to this doji, which shows indecision up near some resistance. Bulls definitely in control, more so than the bears, but again, indecision doji, not really giving confidence after that bullish reversal hammer. And last, we've got natural gas. Bulls made a push to the upside, and they are now pulling back with a bearish reversal candlestick on the hourly. Really liking this daily chart setup. We have our dump, equilibrium with our high of the bounce, higher low, lower high. Now we have a new higher low, and that new higher low is at 3.245. So next resistance that would have to break is 3.494, and you can just see the range is continuing to get tighter and tighter, and we should see a very clear break, I would assume, next week, unless it's a very uneventful week, but I don't imagine that's going to happen, especially with the inventory report on Thursday. So I would expect a break of this equilibrium pattern next week to give us some nice direction into mid-February. So let's get into some daily and weekly setups. ECLM bulls, another new high of the day. So we're going to start by looking at with the biotech sector. Just trying to scroll back here, making sure I don't miss anybody. So XBI. So a little bit more follow through, a little bit more convincing, closing up at the high of the day, shows some strength to the bulls, and we are turning all moving averages back into support. So the past 2 days, with the inability to turn those moving averages into support, that is where it looked like a weak bounce, but we now have those levels as support, and we're looking for a bullish MACD cross. Pretty low volume, inside candlestick on the daily, so still nothing that the bulls are going to be bragging about, but it is a decent day for the bulls and a close at the high. The weekly time frame, that tightening pattern that I've been posting, lower highs, higher lows, range continuing to tighten. It is a solid bullish candlestick on the weekly time frame. So it's going to be very interesting. The next 2 weeks are going to be very telling as to which direction the biotech sector is going to be headed here as we head further into Q1 2017. So bulls have momentum heading into next week. Resistance levels are going to be 63.52 and then up to 63, make that 64.33. And if we see a break of 65.95, that would be a clear bullish signal by breaking to higher highs and breaking out of that channel on the weekly time frame. So I'll keep posting this chart every week that goes by and as it continues to tighten. So the biotech bulls, short-term control, and we'll see a clear break in the coming week or two. Well, let's say 2 or 3 weeks. There's still some space in there. NUGT holding that middle Bollinger Band, so the bulls maintaining the higher low pattern where we had our higher lows. The most recently was 941 and now 949, so still in control in that regard and holding the middle Bollinger Band support, breaking the high of yesterday. So the bulls, now we have a new level to be watching of 949. Resistance is going to be the high of today, 1026, then up to 1060 and 1164. So holding on, but it is still a bearish reversal candlestick on the weekly time frame, spinning top after 5 bullish weeks in a row, rejecting from the middle Bollinger Band resistance. So we need to be watching for the potential to confirm that. And if we lose this higher low pattern on the daily, it will go a long way in confirming that bearish reversal candlestick that is rejecting from that middle Bollinger Band resistance. GDX, same thing, maintaining the higher lows. That level was 22.55. Now we bounced off 22.70, holding the middle Bollinger Band. Very low volume, that's notable. Resistance is 23.27 and 23.50, and it's a bearish reversal candlestick rejecting from the 50-week moving average resistance. So we need to be careful and cautious as bulls, watching for the rejection and confirmation of that bearish reversal candlestick. And if we start next week losing this higher low pattern on the daily, that will be an indication that we are going to confirm that bearish reversal candlestick. Tech sector, very strong. QQQ leading the charge to the upside with all-time highs. What feels like every other day we're getting a new all-time high in QQQ. And we've had a new all-time high 4 days in a row. So 125.92, a little bit of indecision up here, but bull's still in full control. So there's no sign of weakness. 125.92 resistance. If we break 125.39, we will look to this gap at 124.37, but no sign of slowing down at this point. And the weekly time frame, full-on breakout mode yet again. And look at what we've been doing since the election. QQQ in the tech sector is on absolute fire, breaking out, no slowdown in sight. Definitely tech sector leading the way. TCX. A little bit of an upper wick showing profit taking. You can see the bulls ran out of a bit of steam over the past few days. So at least the bulls got some increase in volume, even though some of that was profit taking. Upper Bollinger Band is 51.34. Bulls want to close above that level to remain in breakout mode heading into next week. Certainly overbought. And the weekly time frame on fire as well. Very overbought, but just absolutely breaking out on massive volume this week. The bulls still in control as long as the Upper Bollinger Band holds its support. New resistance is 52.75. And I would say profit taking is going to occur, profit taking and consolidation, if we lose this Upper Bollinger Band either at the end of today, depending on how the profit taking goes in the next half an hour, or on Monday. So we need to keep that Upper Bollinger Band, otherwise consolidation is coming. It looks like SPY's testing the low of the day right now. Might get a little flush here ending into the weekend. Doesn't look like it would be significant, but we are about to test the low of the day. RL. So not the kind of bull day that the RL bulls wanted. So we were seeing some nice healthy consolidation after the rejection from the Upper Bollinger Band. The red flag here, it is still going to be decreasing volume, not by much. Bulls would have liked to have seen a more significant decrease in volume on that pullback. And we lost that middle Bollinger Band. We are still maintaining the higher lows, where we had our low down here at 85.90. Our higher low was at 87.67, 87.49 make that the low of this consolidation. So as long as we form a higher low compared to 87.49, the bulls do maintain control on this oversold bounce. But the close near the low of the day, obviously that's not a good sign for the bulls because it does have momentum heading in the bears' favor heading into next week. So 87.49, losing that level would break the higher low pattern on this oversold bounce attempt. The weekly time frame, trying to confirm that bullish reversal candlestick, and we looked good earlier in the week to confirm that candlestick, but we rejected from these exponential resistances, and we're not confirming that level now. So you can see the last little bounce attempt, rejecting from the 4-period exponential, last week rejecting from it, now this week rejecting from it again. So the bulls need to have some confidence and a strong close on the weekly to get above these exponential moving averages. As of right now, lots of profit taking on that candlestick, and it's all about 87.49 support, and if that's lost, the must-hold level is 85.79, and momentum here favoring the bears into next week. Facebook bulls, strong day. The bulls bought the dip, so we did consolidate on Facebook. We had that Google and Amazon sell-off first thing this morning, but a lower wick showing bulls buying the dip. And if we do start to consolidate a bit and form a bull flag, let's look at Tesla here because Tesla's a perfect example of bull flags. Look at this period back in early to mid-January. Consolidation 3 days in a row, but lower wicks every day with bulls buying the dip. And look at the past 3 days. Bulls buying the dip with lower wicks, nice healthy consolidation, and the bulls are looking to continue to the upside next week. So the Facebook bulls would like that same thing to happen. A little bit of consolidation, normal and healthy. Bulls buying the dip with lower wicks. So support is 131.08. Clear resistance up at 133. Psychological, struggling at that level. We are on the verge of an all-time high at 133.50. So just patiently waiting, and earnings are next week. So we're either going to see a bullish reaction and all-time highs, or we're going to see a bearish reaction and a move down to the mid 126s, or if it's a very bearish reaction, the low 120s. And the weekly time frame for Facebook, still strong. That's a bullish weekly candlestick, not much of an upper wick showing profit taking at all. We just have that little top, 133.50 and 133.14. PCLN bulls in full control. Tons of strength. Upper Bollinger Band daily resistance is 1602.72. So we are rejecting from that level, but weekly time frame breaking out above the upper Bollinger Band after we had been unable to do that on the last all-time high. So this is a lot of strength heading into next week with a bullish MACD cross on PCLN. But the daily chart is pretty extended. Remember on Friday when we saw that strange volume in the last half hour of trading, huge bull move, and it's been nothing but bullish upside since then. Whoever loaded big time money in the last 30 minutes at the end of last week made out like a bandit this week. Couldn't have asked for a better week. GOOG. The reaction to earnings, seeing profit taking after a new all-time high and closing near the low of the day favors momentum for the bears. Support is going to be 817.82, and then previous resistance, now support at 810 psychological support. So normal healthy consolidation at this point, obviously not the reaction the bulls wanted to see, but as long as we form a higher low compared to 799, we maintain higher lows and higher highs, and we did just get a new all-time high. So not all bad here. Definitely a big upper wick of profit taking on the weekly time frame. But again, it would require a big pullback from here to lose the uptrend that we are currently in. So close near the low of the day, we will be looking for some consolidation. But as of right now, normal and healthy. Is some high volume, but we have to factor in some of that volume was definitely bullish action to the upside. NVDA, very strong. So NVDA is at the upper Bollinger Band resistance, and we had this little bounce attempt after the Citron attack. The first bounce attempt, we topped out at 111.92, and here we are topping out at 111.89. So there is a double top at that level, and the upper Bollinger Band resistance is there as well, 111.31. So we're looking like we're going to close right below that level. And we have to see a bullish MACD cross and follow through above that upper Bollinger Band. Otherwise, we will likely consolidate. But this is, without a doubt, a very bullish move. And it's that weekly chart that's guiding us. And every time we test that 8-period exponential support, we bounce off of it. And we're now seeing follow through to the upside from this bull flag pattern of consolidation over the past month. So resistance is 111.92, and then a lot of psychological resistance levels as we head up to the all-time high of 119.93, and it would just be looking at 112, 113, 114, and so on. But that daily upper Bollinger Band is going to be a key level as well, as it's not ascending very rapidly, so it is going to stand in the way early next week, and the bulls are going to have to break out over that level in order to continue without consolidation. So Tesla bull flag on the daily, bullish reversal candlestick. Close near the high of the day shows strength. 252.55 is resistance. Then we're looking up at 255.74 and 258.46. So bulls definitely in control. Very similar consolidation. It would be a loss of the 8-period exponential support that would be a red flag from here, as it has held for 2 months. And we just bounced right off that level at the low of today. So we would have to not confirm this bullish reversal candlestick into Monday for the bulls to be worried, but this is a good setup heading into next week currently. Can't ask for much better consolidation than Tesla has been seeing. Disney, very bullish break, holding the middle Bollinger Band, maintaining higher lows and higher highs, and we're heading to the all-time high, 109.49. So 109.40, let's make sure that's not the all-time high. I had the wrong chart in mind, but the highest price we've seen in 3 months, 109.49. Look at that bull flag of consolidation for 2 weeks. Now continuation after 109.49. Next resistance up at 112.15. So bulls in full control on the weekly time frame. Nice continuation. Just one last little resistance level to get over, ideally on Monday, and we'll be heading for a bullish MACD cross as well. Red flag would be a loss of the middle Bollinger Band support, as it is held for 3 months at this point. Apple is consolidating. Again, it's normal and healthy. We've consolidated time and time again, always maintaining higher lows, then forming higher highs. So if we consolidate, as long as we form a higher low compared to 119.37, bulls remain in control. And notice the very, very tight ranges that we see on these consolidation days. That's exactly what the bulls want to see, and that's what we're seeing on SPY right now. So the weekly time frame trying to close the day above 121.66 to break out above the upper Bollinger Band. But bulls are in full control on all kinds of time frames. It will be a red flag in the short term once we lose the higher low pattern on the daily, but we're in no risk of doing that at this point. And nice healthy consolidation going on the daily time frame. Resistance is 122.44, and then we would be looking up. I don't see a ton of resistance until the 125 to 126 range. So 123, 124, then up to this price action back around the all-time high. Lots of names near their all-time highs. MSFT breakout, gap up. Pretty strong close, definitely a little bit of profit taking, but not significant. Upper Bollinger Band will act as support on any consolidation. Weekly time frame breaking out above the upper Bollinger Band, 65.28. Strong close on the weekly. So looking good. Upper Bollinger Band on Monday will be in the mid $65 range, and the low of today was 64.89. So we will have a couple support levels to watch. And if the bulls were unable to break 65.91 on Monday, then we would be looking for a potential pullback to that upper Bollinger Band. But bulls still strong control, buying the dip and closing closer to the high of the day than the low of the day. Blue sky breakout there as well. CHK rejecting from the upper Bollinger Band, trying to close above 695 to keep the middle Bollinger Band on the daily. But either way, it's worth watching for the bulls to show back up early next week. The weekly time frame is rejecting. Let me zoom in here. But we're rejecting from the 100-week moving average resistance 2 times now. So that clearly has to become support, and we need to hold this weekly middle Bollinger Band of 665. So that 100-week moving average is going to be in the 720s next week, and a close over that level is going to be the go signal after consolidation over the past 6 weeks. So we did get that bullish break of the lower high pattern on the daily, turn that middle Bollinger Band into support, decreasing bear volume on a couple days of consolidation, and now looking to form higher lows and then continuation of higher highs. But the daily upper Bollinger Band is going to be in the way. We're going to have to keep updating that level, and it's going to require a high volume breakout to break above that level. Otherwise, we might trade sideways for a while. APH is looking fairly weak, and support was 521, and it looks like we bounced off 520, so we're threatening to break this higher low pattern. A penny isn't enough for me to consider support lost. Definitely like to give a little bit of wiggle room in terms of a penny or two. But if we see a break of 520 on Monday, then the bears are going to resume control here. So it's a critical start to early next week, as we have pulled back fairly significantly. After 520, looking down at $5 psychological would be the next level to be watching. APH on the weekly time frame. You can see we're topping out a little bit. The middle Bollinger Band is trying to catch up here, but definitely not a bullish week. Not a ton of volume, so that's a good thing for the bulls, but red every single day this week. Testing key 520, 521 support, must hold early next week. A break of that level, and the bears are going to take control of the short term. LCI bounce trying to play out here. And we've got, I'm getting all kinds of private messages and I can't read them when I'm live. If you want to talk to me, in general chat's the place to do it. LCI support is 1850. And we are trying to turn these exponential moving averages into support now to see a little oversold bounce. Looks like we have a gap at 2010 to be watching and $20 psychological resistance as well. Looking for a bullish MACD cross. It is a weak, fairly weak bounce at this point, so want to keep an eye out that it might be a bear flag on the daily time frame. Although the bulls are forming a higher low on the weekly, inside candlestick on the weekly to be watching next week, and we need to see follow through and a break of $20 to see this oversold bounce on the daily time frame play out a little bit more significantly. So $20, 2010, and then the middle Bollinger Band on the daily. A little bit of an upper wick of profit taking. Bulls need to maintain higher lows on the daily to give confidence in this oversold bounce playing out. So in terms of swinging it, I'd like a stronger close. Must close above 1951. If we don't close above 1951, I absolutely would not swing it. But trying to turn those exponential moving averages into support, that would be enough to swing it. Just would be very cautious on Monday as this bounce, not entirely convincing that the bulls are going to show up. PANW, nice consolidation on the daily. Bullish candlestick bouncing on the back test off of support. 143.92 is the 100-day moving average, and we're closing up near the high of the day. Potential bull flag of consolidation. Weekly time frame turning the middle Bollinger Band into support on the verge of a bullish MACD cross. Higher low, a couple higher lows on the weekly. And we did get a higher high. Well, we're struggling at 165 resistance. So the daily time frame definitely looks good, and we're on our way to filling this gap of 158.32. So bulls do have momentum. 148.14 as resistance next week, and the bulls want to continue to hold the higher low pattern. So the low of today, 143.19, would be key support for the bulls to hold into next week. So PANW daily chart definitely favors the bulls. ACOL, not a ticker. RAD, bulls bought the dip big time today. Oversold bounce underway now. Big bullish reversal hammer. Huge volume. Bulls buying that dip. And we need confirmation. We need to get over these exponential resistances that rejected the price on Wednesday and Thursday. So we need to break 696 on Monday, and then we're looking up at 723. Lots of momentum for the bulls buying that dip in a big way. And now we need confirmation and follow through. Weekly time frame bouncing off the 200-week support. That's where we bounced off in November. Bouncing off of it again, even though we dipped lower. And not enough to be a bullish reversal hammer here on the weekly time frame, but certainly a bullish reversal hammer on the daily time frame, and we need follow through tomorrow or Monday to confirm that, and a break of 696. So Baba is pulling back after a big bull move, but look at that volume. That's exactly what the bulls want to see. Very low volume on consolidation, normal and healthy. There is a gap down here at 98.67 we'll have to keep an eye on, but at this point, I would look for the bulls to show up before filling that gap. Support is 100 psychological, and we need a bullish reversal candlestick indicating that consolidation is done. So I would definitely be looking for a potential bull bounce early next week, unless we see an increase in bear volume and a move down towards 100. Clear bull break on the weekly, getting above the middle Bollinger Band on the verge of a bullish MACD cross. Bulls are looking good on the daily and time frame, just cooling off after a breakout. Definitely got a bit extended after that gap up. But again, that volume is perfect for the bulls heading into next week. And the question is going to be, are the bulls going to show up Monday or Tuesday, really? Netflix extremely strong on the daily, up at the high of the day. So consolidating again, contained consolidation, small candlesticks, not a ton of volume. And continuation, we're looking at the all-time high, 143.46, really the only resistance. So the weekly time frame certainly bullish, and it's been very, very bullish over the past few months. We'll see if the bulls can break that level on the next attempt. Certainly in control, support is going to be 138.51 and 137.03. These, we have a couple little consolidation lows now that the bulls are showing up and closing strong at the high of the day. And certainly stands out because SPY hasn't really done anything today in terms of bullish action, and Netflix certainly following through. IBM. IBM does have a double top, and we're closing at the low of the day. So 179.25, 179.20. Breaking the low of yesterday, closing at the low of the day. And next support, need to look at the hourly time frame. Not much hourly support here. So I would say the next support is down at 176.13. There's a little gap there, it looks like, at 176. That would be the first target for the bears. And certainly some bearish momentum if we close down here at the low of the day. LABU is going to look exactly like XBI, a nice strong close. Although, we didn't break the high of yesterday. Oh, I guess XBI has not either. So it is an inside candlestick on the daily time frame heading into Monday. Break of 37.92, and we're looking up at 39.43. Still not an entirely convincing bounce. The bulls aren't really wowing us, but they're holding up well into the end of the week. Certainly a bullish weekly candlestick, and we have that same tightening pattern, lower highs, higher lows. Break is coming within the next 2 or 3 weeks. It's going to give us a nice indication as to direction for February. So NVDA is very bullish. We know AMD is in the same sector. So AMD needs that middle Bollinger Band as support. 2 rejections in the past 3 days at 1074, that resistance. Need to close above that level, and you can see the 50-day moving average support catching up. Tightening range between those 2 moving averages to be watching. Weekly time frame favors the bulls. A month of consolidation after a breakout. Big bullish reversal candlestick, and trying to resume this uptrend. No bearish TCG cross of these exponential moving averages. And resistance is the high of the week, 1097, if we can get over that middle Bollinger Band on the daily. TWLO, bulls buying the dip a little bit, so a little bit different than we've been seeing with bulls taking profit at the end of the day. So the upper Bollinger Band, clearly resistance, rejecting the price the past 2 days. New support established at 28.85, and next week we need to see these exponential weekly resistances become support. 3 bounce attempts and 3 rejections from the 8-period exponential. It's currently 30.05, and next week it's going to be just below 30. Little increase in volume. Definitely looking like we could see a bounce play out. We're going to have to get above the daily upper Bollinger Bands, otherwise we're going to have to consolidate a bit more significantly as they are dropping rapidly. We're going to require a breakout to see bullish action early next week. CMG. So support on CMG holding, and finding support was looking at previous resistance levels, and we knew 414 was a level. We had a little double top at 414, and then once that level broke, we were looking at 411, and we didn't get there. We came $1.17 away, but 411 was also a double top, and it's also the 200-day moving average, and I believe it was the hourly 100-period moving average as well. So bulls buying the dip, they are still in control on this daily time frame after that higher high. Another higher low with momentum favoring the bulls into next week. All about that 50-week moving average resistance. On the verge of changing this trend, we need a close above 420 psychological on this weekly time frame to change the longer-term trend and to be looking back up towards 440 and then up towards 500. Still battling resistance, but the bulls holding on strong. So as I've been saying, I keep pointing out the correlation between the market and gold. And if it stays this inverse, I would favor the gold bears because the market is really strong on this consolidation. This is normal, healthy consolidation. And I would not be surprised to see a new all-time high next week at all. In fact, I'd say it's more likely than not. So if that correlation stays the same, we could see gold pull back if the market hits a new all-time high. So the JNUG bulls are absolutely closing strong. Let's see if gold broke that resistance. Looks like we're breaking it on the hourly. Well, nope, still there. But the bulls are closing strong. They're maintaining the higher low pattern on the daily. Support is 765 and now 767. Close at the high of the day. We just need to watch that market strength early next week. So as long as the higher low pattern on the daily remains intact, the bulls are all right. But if we break 765, we will be looking for a bearish MACD cross on the daily and a pullback. And we do have a bearish reversal spinning top rejecting from the middle Bollinger Band weekly resistance. We'll have to see if we confirm that level. And if we break 765 next week, it will be more likely than not that we do confirm that candlestick with further consolidation. EXPE, very bullish. I'm sure everybody's responding to PCLN. Let's just check TRIP. TRIP not as significantly, but EXPE is up at the high of the week. Very strong oversold bounce over the past couple of weeks. And we're looking up at resistance from here at 124.04. So bullish momentum into next week. Weekly chart bounce continuing to play out. We have a nice uptrend of higher lows and higher highs in all of 2016. And the bulls are looking to keep that intact. Increase in bull volume. And let's see how much of a laggard EXPE is going to be to sector leader and blue sky bull PCLN. And it's still running. Just hit a new high of the day here. Really strong move on PCLN. Looks like we might close above the daily and the weekly upper Bollinger Band. STLD, bullish reversal candlestick confirmed. Break of the inside candlestick, trying to close above the middle Bollinger Band, 36.22. We did reject from it 3 days ago. Bulls want to break the lower high pattern by getting above 36.87 early next week, ideally Monday. Big bullish candlestick. Look at that volume. Very clearly, the bulls are buying that dip. Could make the argument that's a bull flag. It's a little bit more drawn out than we're used to, but 2 months of consolidation giving back probably about 20% of the breakout. Very healthy consolidation, and bulls look ready to go after buying that dip. We need to confirm this candlestick and break the lower high pattern. Bulls want a break of 36.87. The sooner the better. Really good looking weekly chart. Upper Bollinger Band resistance rejecting the price the past 2 days. So we now have support of 44.03. Resistance is 45.79 along with that upper Bollinger Band. And we're rejecting from the middle Bollinger Band on the weekly as well. That level is 45.81. So we're still forming lower highs and lower lows. We did confirm the bullish reversal candlestick this week from last week, but clearly middle Bollinger Band weekly resistance a level to watch, as is 46.48. Still not trusting the weekly time frame. Clear resistance to be watching, but the daily time frame did break the lower high pattern. So we'll give the bulls a chance. See if they can get that weekly middle Bollinger Band as support and try and reverse this trend, at least in the short term. So checking in, we have a very low volume SPY day, exactly what the bulls want to see with this consolidation. So the biotech bulls closing with momentum. GWPH still seeing weakness. We had a clear bear break yesterday and followed through to the downside today. Still maintaining higher lows on the daily. Bulls need to hold 114.75. I would say the must-hold level is 110. Netflix a new high of the day. Strong close. PCLN strong. Tesla strong. Still going to keep an eye on GoPro early next week. That's healthy consolidation on decreasing volume after the breakout. I like that weekly chart on GoPro turning things around. Getting exponential moving averages as support, looking for a bull TCG, bull MACD cross, increasing bull volume. Definitely keeping an eye on GoPro to break the lower high pattern on the daily. We need to break 1015 on Monday. I'll post the earnings calendar over the weekend. That's when they put them out, on the weekend into next week. The range today on SPY was 83 cents, still very small. Low volume, small range consolidation. Let's see what the financial sector is doing. Same thing, healthy consolidation, bearish reversal doji being confirmed. We are closing at the low of the day, but tiny bear volume. We do have a double top, 23.79 and 23.80, highest prices we've seen on XLF on this bull move. We'll definitely be watching that. Bulls need a convincing break at that level early next week in order for SPY to hit all-time highs, in my opinion. And just a reminder, SPY is 0.3% from an all-time high right now after 2 days of red. Solar weekly charts are still weak. Still lower highs and lower lows. FSLR is dumping on the weekly. So still no trend change. Keep checking in every now and again. TAN, T-A-N, is the solar ETF. Still weak, rejecting from the weekly middle Bollinger Band. Tesla hitting some new highs, as is XBI and the biotechs. Netflix. NVDA heading back to the high of the day. H bulls are trying to defend the middle Bollinger Band on the daily of 23.91. Almost a bullish reversal hammer there, you could make the argument. Would need to confirm it on Monday. Back testing the weekly middle Bollinger Band, 23.90. Just barely holding it. And bulls want to maintain this higher low pattern. We've seen weekly higher lows 7 weeks in a row. So a break of 23.75 next week would be a red flag. And I would say bulls need to keep this daily middle Bollinger Band with some upside bullish follow through on Monday. Tesla bulls definitely buying into the close. So I hope everybody has a good weekend. We'll talk soon.